Time to go inside out on Chewy, the pet product retailer, lower after reporting its earnings. We want to get some details. Our pleasure to bring in Arun Sundaram, equity research analyst at CFRA Research. Thank you for being with us. Chewy was an exciting name. It always led the way when it came to pet food and being on that automated type of thing. And it was definitely a leader because it doesn't have much competition. At the same time, we are seeing some details in the earnings that are putting it under some pressure of about 12%. What did you make of it?
Yeah, hey Nicole. Overall, I thought the quarter was really strong. The top line was exceptional. Sales grew 9%. Their number of active customers increased 4.5%. That's that third consecutive quarter of growth that we've seen, that active customer number. And then net sales per active customer, the amount of money each customer spends, continues to hit new all-time highs. It's about $591 a year now. And I think there's significant run room in both active customer growth as well as net sales per active customer. The stock is down. I think it's due to the fact that the profit this quarter was just in line with consensus. There wasn't a beat there. But if you really dig down into the profit numbers, there were some one-time, I think, profit headwinds this quarter due to like fulfillment center expansion, some labor costs. They also front-loaded some inventory ahead of tariffs, I believe. So some one-time profit headwinds in the quarter, which led to the just inline EPS and inline adjusted EBITDA. And I think that's why the stock is selling off.
I see. So at this point now, still a buy, and your target?
Yeah, we have a strong buy rating on the stock and a $53 target price. I think for investors, there's a lot of reasons for investors to be excited about Chewy. There's just many initiatives at Chewy that I think will drive strong growth over the next 3 to 5 years. The company just recently got into fresh food and frozen food. That's a category that's growing in the mid-teens level right now. Chewy's also expanding their loyalty program, Chewy Plus. It's just 3% of their net sales right now. It's a very small part of their business, but that's growing pretty well. They're growing their healthcare business, more prescriptions at Chewy.com, as well as they're opening physical vet clinics as well. There's only about 20 vet care clinics by the end of this year, but there's, I think, the long-term growth there. It's also getting into high margin business streams too, like Chewy Ads. That's also a very small part of their business right now, but it's a very high margin business, which is growing in the long term. And Chewy Ads is one of the reasons why we're seeing pretty strong gross margin expansion. This past quarter, gross margins expanded by 80 basis points. And a lot of that has to do with the fact that it grew its ad business, which is a very high margin business. So, and the company, lastly, has no long-term debt, generates plenty of free cash flow. It's also buying back shares as well. So I think there's a lot of reasons for investors to be excited about this stock.
Is today the day to buy it? Because with your $53 target, do you see more downside? Should someone be dollar cost averaging into this, or is today a good day to get in?
Yeah, I think that this is a good buying opportunity here. Like I said, I think investors, or the reason the stock is down today is because of that inline profit outlook. But if you really dissect the numbers here, there were some one-time profit headwinds this quarter. I think over the next 3 to 5 years, we'll see strong long-term growth at Chewy as well as margin expansion. Right now, EBITDA margins at Chewy are a little bit below. It's about 5.5 to 6%. I think over the long term, it can hit potentially 10+% there. So some strong long-term growth there. And yeah, I do believe that today's sell-off creates a good buying opportunity.
I do want to talk about tariffs, but Amazon, Walmart, are they really competition for Chewy? Are they, chewing away at the Chewy profits or margin or, sort of penetration at all? Market share is the word I'm looking for. Is that what's happening or not necessarily?
Sure. Yeah. Yeah. The retail environment is very competitive. Obviously, the biggest competitors for Chewy are Walmart, Amazon, Costco. And that's been kind of the bear thesis for a long time for Chewy, but that really hasn't impacted their numbers. At least it hasn't impacted them yet. Like I said, this quarter net sales were up 9%, a strong number. That's faster growth than most of its peers. And interestingly, about 3/4 of Chewy's customers are also Amazon Prime customers as well. And yet that hasn't really impacted Chewy's top or bottom line. And it goes to show you that I think it has a very differentiated platform, really good customer service at Chewy. They sell a broad array of products. It's not just food and supplies. they do prescriptions, they're getting the vet care, things like that. So I think over time you'll see more and more consolidation of spend into Chewy. So therefore meaning, customers won't be spending, at Chewy, Costco, Amazon. They might be consolidating more of that pet spend into Chewy.
Yeah, understood. So what other big names do you have buys on this morning that you're out looking for? You're always touting something. I like to know pick your brain, Arun. What else you got on your radar quickly?
Yeah, our top stocks, we have a strong buy on Chewy. We have a strong buy on Amazon. We have a strong buy on Walmart. And we have a buy rating on Costco. It's really the retail landscape that we really like right now, these big box retailers. And then we think there's some strong top and bottom line growth for all of those companies.
Arun Sundaram, always great to see you. Thank you so much. Equity research analyst at CFRA Research. Thank you. So Tom White is here, host of Fast Market, taking a look at some of these names. And we'll start off with Chewy. Amazon Chewy gave us his ratings on these. He has strong buys on both. Do you have an example trade for us on Chewy this morning?
Yeah, with the pullback, the stock's still positive this year. I think the growth rate of, their auto ship is up to 83%, so that's recurring revenue at this point. Implied volatility levels have been crushed post-earnings, even though the stock's selling off here. So it maybe gives somebody an opportunity. So I looked at a strategy that takes advantage of that lower implied volatility post-earnings. And gave myself plenty of duration on this trade. I went out to the January monthly cycle, so about 128 days to expiration, and we're just going to buy a call vertical where I can offset some of the costs on it, buy a higher delta call that reacts more like the stock with the expectations. Hey, it's going to rebound, but I'm giving myself about 3 months in this position, 3 or 4 months. January, buy the 35 strike call and then against it to offset some of the costs because maybe it goes higher, but it doesn't explode back to $50. I looked at selling the 45 strike call against it. So a bullish $10 wide call vertical, you're paying roughly about a $3.60 debit. Instead of buying the shares and having all that capital tied up in that, you're buying using the option market to create better leverage and lower risk on this. But if you pay that $3.60 debit, it takes your break even up to $38.60 over the next 128 days. That's only about 6% above the current share price in there. So buying a $10 wide call vertical, your risk is $3.60 to make $6.40. So you've got a good risk reward set up in here. But I think the key with this one, Nicole, is the lower implied volatility lowers the entry point price and risk on this trade, but then also giving yourself plenty of duration for the stock to rebound.
All right. Thank you for that example trade. He had a $53 target. Also, he had a strong buy on Amazon. What are your thoughts on Amazon's chart today? You have an example trade there, Tom.
Yeah, stock was having a decent year, but pulling back about $6 here today. I'm not sure what the story is. I didn't see anything that kind of stuck out. But it still is a few percent off its all-time highs that it hit in February. One of the Mag 7 names that hasn't recently hit an all-time high. And this pullback maybe gives you some opportunities here. I went shorter dated as far as duration goes, as far as trade, but kind of the same setup where I can offset costs, take advantage of low implied volatility. The IV percentile rank on Amazon is about 6%. So it's in the bottom nearly 95% of implied volatility levels that we've seen over the last 52 weeks. So that gives me a good entry point for buying directional bias trade. So in this example, I went out to the October monthly cycle. So just about 37 days to expiration on this one, shorter duration. Buying the slightly out of the money 235 strike call, that's got the higher delta. It's going to react more like the stock. And then against it, where you think the stock's going to go over the next 6 weeks or so, sell the 250 strike call. So a bullish $15 wide call vertical. You're going to pay a debit of $550 on that. So there's your risk, $550 per spread on it. And that can expand to $15 if we reach 250 on this one over the next 37 days. The break even is only about 3% above the current share price, just above $240 a share. So that's where you need the stock to go. And with these type of directional bias trades, the Chewy one and this one, because I'm buying these directional verticals, it gives me that flexibility to close it early. I don't have to wait 37 days to close this. Say this stock hits above 240, maybe goes to 245 prior to expiration. hey, it gives me that flexibility. If I bought 10 of these verticals, maybe I sell 5 of them, or maybe I close the whole trade. So it gives you that flexibility as far as trade management.
Okay. Tom White, great to see you. 2 great example trades for you there on Chewy and Amazon every day here on Morning Trade Live. Thank you.